For Global Business Update, Michael Wilson joins us now from London. Good morning, Michael.
Good morning. A negative start to Asia Pacific stocks at the beginning of the week because of the continued unrest in China. How large it actually is, very, very difficult to say at the moment. Oil futures are now hovering over 2022 lows because of demand concerns from what is the second largest consumer in the world. The Hang Seng down quite a bit this morning. The problem with these protests that are actually taking place, apart from the fact they're protests, is that it's very, very difficult to say. I mean, it's looking at a country of 1.4 billion people, and how effective and how significant are these anti-COVID protests? Not so much about the damage, the economic damage that the zero COVID policy is doing to the China economy, but more just for the day-to-day life of people there. People's Daily, which is the Communist Party's official newspaper, it's running a front page opinion piece saying on the need to make COVID controls more effective and much more targeted than the sort of blanket zero at the moment. Just staying with China, Tesla's recalled more than 80,000 cars in China over software and seatbelt issues. It's also recalling in that 80,000, 2,700 imported cars as well, and 10,000 others and 10,000 others too. There seems to be a bit of a problem, as I say, with Tesla software. Generally speaking, it looks as though, according to Moody's at least, inflation may well have peaked. Factory gate prices, shipping rates, expectations of supply, headline price growth, and so on will slow commodity prices down. So that's Moody Analytics easing of global supply bottlenecks, global inflation hitting a record 12.1% in October. As far as the United States is concerned, stock futures fell on Sunday evening after Wall Street notched gains during the Thanksgiving shortened trading week. The moves come after the major indices ended all of the week higher, even though there was that short week, basically lifted by comments from the Fed minutes, the FOMC minutes, which kind of reinforced what the Fed was saying about interest rates. And maybe a aggressive path to interest rate rises is flattening very, very slightly. No week is complete without reference, or no consumer report is without reference to the Black Friday records, which show that the US consumer is alive and well. They spent £9.12 billion online shopping during Black Friday this year. That's according to Adobe. Online sales for Black Friday up 2.3% year on year. However, there's a lot of late payments. Late payments have also increased, and some of the people were buying gaming things like gaming consoles, drones, Apple MacBooks, and games as well. But a lot of people going into debt to do that. So again, that's a problem which will no doubt arise in the future. We need to take a reality check on the Nasdaq. Tech companies losing 7.4 trillion in 1 year. Nasdaq has tumbled quite sharply from its high, all-time high a year ago, layoffs and all the rest of it. EU now, and I'll transfer you to the European Union. The worries about oil and the energy, probably the majority of it will come next winter, but it won't last forever. There's a fierce race against time for European nations to fill up their gas storages ahead of winter. It looks like they've done it. More than 95% I'm reading of the EU's gas storage is filled by mid-November, but the crisis is far from over, and the big crunch time is going to be next year, apparently. On energy in the UK, the Prime Minister has signed an £18 million public information plan to save energy, pushing on cutting power, and the rest of it's called Help for Households. He also wants to reduce power at a time when state is subsidising gas and electric prices to the tune of £1 billion, above tens of billions of pounds, and also wants to release an extra £1 billion to insulate various homes. Black Friday did quite well in the UK as well. Sales rebounded. Barclaycard payments, which processes £1 in every three spent, said that transactions were up 3.2% on the year. Footfall in shops was up on 20 2021 because of no COVID rules. So sales doing reasonably well. And as far as oil's concerned, I'm not going to give you the oil price again because it's too volatile. All I can say is, and you ought to be aware of this, is that Brussels is racing to finalise the proposed oil price ceiling on Russian oil shipments as well. Remember that what they're also saying is they will no longer insure ships which carry them. The deadline is December the 5th when the embargo kicks in. Places like Poland are saying it's not low enough. The maximum price level $65 a barrel, but hawkish members like Poland are saying that this would be ineffective because it's too close to the price that Russia already gets on the market, meaning the sanction would not work. That is the global view this Monday morning.
All right. Thank you so much for that. We're seeing a lot of Black Friday surge, but there's also a story this morning coming out that says inflation might be tapering down now because of shipping costs has been on, the low now, and also inputs. So because of production input, farm grade prices are reducing and all of that. Could that be the beginning of the end of inflation? Could we see that 2023, maybe last quarter 2023, we might be able to have a hang on this inflation issue once and for all? And what does that portend for growth, in the world as we start to get our lives back after the war of COVID that has happened? But in China, they are still having those lockdowns that are leading to protest in China. Is China going the right way about it? Isn't China stifling its own economy owing to the fact that growth has been really tepid out of China?
I'm just looking at the protests now, and again, how significant are they? Some of the headlines are saying it's worse than Tiananmen Square was all those years ago in the late 90s. I really don't know. You're talking about a 1.6 billion population. There's no question that a lot of people are very annoyed about the COVID restrictions, which seem to be absolutely blanket. And as I said, I'm not sure that what's selling to them is the fact it's slowing the economy. They're just thinking about the way in which it's interrupting their lives. And we saw those protests at the Foxconn factory, didn't we, last week, and so on. So generally speaking, there appears to be a big amount of unrest in China. Are they going about the right way? Well, I think they'll probably change tack. I suspect that the zero COVID policy is something that the president needs to back down from very, very gently indeed. He won't do it suddenly because it would look like a loss of face. But I think that generally speaking, you're seeing a lot of relaxation. We've seen relaxation in gaming. We've seen relaxation as far as property is concerned. We've seen a relaxation as far as the cash cushion that banks need to have about their corporate balance sheet. So all those kind of things to me points towards a marginal relaxation as far as China is concerned. But I think the most significant thing was the op-ed piece which I quoted to you from the China People's Daily, which is the communist organ. And if that's saying that it's about time this was a bit more targeted, I suspect that's probably may well change the mind of the government. As for what was your other point? Your other point was, inflation globally. Yeah, again, all I'm doing is quoting what Moody's is saying. Moody could be right, could be wrong. I think when you get granularly down to shipping costs, though, and supply chains, I think it probably opens the door to inflation going down. Something else which has actually arisen, which I didn't mention in my report, but as we're talking about inflation, we may as well, which is that a lot of, and I don't know what it's like in your country, but certainly in the UK, the likes of Marks and Spencer's and ASOS have warehouses full of clothes because supply chains got slightly better and then demand fell. So they're sitting on lots of stock. Now, I would have thought that what that would do in the end, because of the prices going down, would actually speak to a fall of inflation, but I think that's just anecdotal at the moment. I think when you start looking at supply chains, that's the granular activity, and it looks like shipping costs are going down. So let's hope so. And of course, all that means is pretty obviously that central banks don't need to be so aggressive. But I do feel as though it's some months away.
Right, thank you very much, Michael. Let's talk about the Rishi Sunak, Prime Minister of Britain, signing off millions for that campaign. Whilst it's important for energy saving, also for people to stay warm, it's interesting that even though it seems like the British government is spending a lot of money on the campaign, in the long run benefits the government itself, because it also reduces the cost of people going into hospitals. I understand that academics have said that it costs the NHS about £860 million in the winter period, as there are increases in the number of people accessing healthcare at that time. So perhaps it's something to borrow from, spend money to save money, as it were. But moving beyond that, just to ask a question, I read an article with regards to the loss in the tech industry in the last year, recorded in the last year, and what we've seen in recent times of downsizing, laying off of workers. And the opinion was that this would give birth to more innovation, as those who had worked prior for organizations like Meta and the likes who had had to downsize so individuals would then begin to innovate whilst they are out of work. What's your take on that thought?
I think that necessity is a cause of innovation. Certainly, I think you're absolutely right. It has been throughout history. What we're looking at is tech valuations as far as the Nasdaq's concerned. It doesn't necessarily reflect the efficiency of the companies themselves. What the stock market says a company is worth and what it actually is worth are two very, very different things. Pretty obviously, but I think you're right. I think a lot of innovation will take place. We haven't seen the end of tech. It's just that it's an industry which is relatively volatile and goes through highs and lows. I mean, you remember the big tech bubble in the early 2000s. I mean, that was a similar kind of thing. I don't think this is quite like that. I think what we're seeing here is the Nasdaq. It was a valuation more than the efficiency or not of the companies themselves. But yes, I would expect innovation to come from tech companies. Why not? Yeah, of course.
Well, two quick things. Let's start with the Federal Communications Commission, the USFCC, deciding to ban the sale of telecom equipment from 5 Chinese companies, including Huawei and ZTE. We've been on this since the time of Obama. Then in October 2021, the Securities Equipment Act was passed. And now we have a situation whereby, people are not allowed to buy from these 5 companies. And the main consideration is national security. Also, in the UK, you recall that there is the plan to ban, the use of any telecom equipment from China, with effect from January 2023. Now, who will bear the cost of this? Because in the response by the telecom, companies of China, the manufacturers, they're saying that, look, it's Americans that are likely to suffer. Of course, they deny that there is any, breach of national security in terms of their, of their own involvement in the matter. Second, now in China, today is the 3rd day of protests. As you pointed out, the Hang Seng index has gone down. Hong Kong stocks have gone down. The Shenzhen component has gone down. There is protest, across major parts of China. Is this a vindication of the Western media that continuously argued that the zero COVID policy would not work? But we'll recall that Xi Jinping and Xinhua, the official news agency of China, had consistently said, oh, no, that's not the case. This has followed science, and that there's no going back on zero COVID policy. Now it has caused this turmoil. Are we looking at a repeat of 1989 Tiananmen Square, massacre, considering the fact that Xi Jinping says he will not tolerate any dissent?
You talked about headlines and you talked about the media. Some of the headlines I've been reading this morning have likened what's been going on, the protests, likened them to Tiananmen Square all those years ago. I am saying, as I said earlier, that it's a big country, 1.3 billion people. And are these protests actually part of what's going on in the whole country, or are they just because the Western media has decided to blow them up? I think, as I said, the most important thing Let's do two of the most important things. Number one, the People's Daily commenting on it and saying it's about time that the COVID lockdowns were more targeted. Number two, and is this the end of the blanket COVID lockdown policy, the zero COVID policy? Well, I don't know. But what I would say is, if you think that shutting down places like Shanghai is helping the economic march of China, then I don't think that's right. And so I think that something will change. It'll take a while, but the most important thing to remember, which we should all do, is that China does not want to lose face over this, because that would be for them unforgivable. So any moves, it's just like what we said. Do you remember all those months ago we were talking, were we not, about Evergrande and about the property market? What I was saying was that there would be no change overnight. Whether I'm right or wrong doesn't matter, but there was no change overnight. What's gradually happening, gradually in the background, things are changing. And I think you may see the same here.
Well, I was talking about the ban on Chinese telecoms equipment by the US and also the proposal by the UK.
Yeah, I think that's the kind of thing that, I'm certain that will take place. But it's moving towards this other thing about China wanting to sit down at the big table with all the other powers and because it cannot exist in isolation. It has to sell its goods somewhere, and I think this is all part of the trade thing. It will happen. But you were quite right to note the business about public buildings in the UK. The same thing has happened with the SEC in the United States, and also with their legislation in the United States. And they're worried, obviously, that the Chinese have implanted some sort of technology. I don't know what it's like in your country, but people in the UK are getting rid of Alexa now because they feel as though that's like a foreign voice in their own home, wondering what they do. We hear scare stories about video doorbells, containing Chinese technology, which is somehow spying on the people who live in the houses. So we live in those kind of times. If you want to adopt technology, you have to adopt the risks as well. I think that's what I would say. Whether or not it becomes permanent, I doubt it very much indeed. I think it's economic saber rattling.
Well, thank you very much, Michael. Now, for business updates across the African continent, Rotus Udiri joins us. Good morning, Rotus.
Good morning,
and congratulations.
Thank you. Good morning, Angel. Good morning, Rufai. Thank you so much. Yeah. So congrats to the entire company. Arise TV picked up a couple awards, capital markets coverage awards at the Pearl 25th award ceremony. Pearl is performance earnings and returns leadership. They're an NGO, non-profit organization that have been essentially highlighting capital markets performance of companies on the exchange. The capital markets, basically publicly traded companies. So there were a lot of winners that night. Fidelity Bank, Seplat, Dangote Cement. They basically just highlighted, the performance of these companies. And what they've been doing is trying to essentially bring more awareness to the capital markets. And it, came at a pretty good time, seeing as the NSC has risen, that's the Nigerian exchange, has risen back up to double digits as far as returns. They had a pretty good week this past week. Black Friday, we continue this conversation with lack of data. We talked about this prior. Now here we are again. You saw Michael Wilson telling us record number, $9 billion spent by consumers there. Still here, no information. We move on to cryptocurrencies and the SEC. There's been some clarity now from Mr. Yuguda, who is the Director General of the SEC, saying that the digital push for trading in digital currencies is not going to include crypto. If you remember when they put out a framework, it sort of suggested that the language in their framework was that cryptocurrencies are securities and as such fall under the purview of the SEC. But because there is no link, because of the central bank ban on the financial sector being able to facilitate trading in cryptocurrencies, they're going to leave it alone for now. Also, Mr. Yuguda mentioned the volatility in cryptocurrencies. Bitcoin was as high as 60,000 earlier this year. It's now dropped below 17,000 with the quote-unquote crypto winter, FTX, and all these other scandals that have been taking place. In fact, speaking of scandals, the former head of the FTX is going to be speaking at the New York Times Deal Book event, which is just has everyone, agog. From there, we move to the metaverse. Meta held a mixed reality concert in Lagos a few days ago. Tenny was there, Arya Star, a number of other artists. That was essentially meant to blend creativity, augmented reality, avatars, NFTs, with artists and other creatives, essentially. And the concert, you could use your phone to actually add avatars and other augmented reality figures to the artists that were performing. And so that Meta is making that push. Now, however, if you look at Meta stock, where is it? I think it's down about, you can see that red line. It's down about 67% so far this year. Now, I remember Ayo was asking Michael Wilson about the tech layoffs and so on. They've announced a large number of layoffs. The Wall Street is not really buying the metaverse for right now. I don't think they see a successful use case. Bringing it here for creatives in this country, you still got to talk about broadband penetration. You still talk about electricity, internet connectivity, and how exactly artists and creatives are going to be able to make money from this. So that is still up in the air. Mark Zuckerberg has put all his chips on the table, and he's saying that he's going to spend and get the metaverse going. But investors just aren't buying it for now. So that looks like it's a long-term play. And then Ghana, their Monetary Policy Committee is meeting today, expecting a decision. That's Dr. Ernest Addison, the governor of the Bank of Ghana, you're seeing there. Inflation is north of 40%. There's a mix. It was somewhat similar with Nigeria, where analysts are saying they're not sure if they're going to hike or they're going to hold. Inflation has just run away. The CD is the worst performing currency in the world. And you combine that with elevated commodity prices, elevated prices for food, that just contributes to, the analysts are saying you can see inflation averaging 30% for the year. So it's a really tough position for Ghana. What will Ghana do? I think they'll hold the rates. I don't know. They might as well hike. But I said the same thing about Nigeria, and I was wrong.
So the parameters were different for Nigeria because it was like a full cocktail to attack inflation. And at the same time, they were doing the Naira redesign thing, and they needed to hike the rates, to be able to cushion the liquidity. But Ghana's case is quite different. Ghana is a lot of, fiscal indiscipline, and especially during COVID. So I think the conversation is very skewed when you say Russia and Ukraine plays a vital role, not as much as your indiscipline, your economic indiscipline. And pretty much that's the case that happened with Ghana. Ghana didn't have stable buffers, but you see how ministers and the likes went to town with lots of corrupt cases and monies couldn't be accounted for, and how the ministers were feeding fat, and now they're having all this austerity measure and all of that. So, to a certain extent, I don't know what Ghana will do, but when you ask the question, is it really a liquidity problem? Not really in Ghana. It's pretty much supply of goods, because you have extra factors that they have to import goods and things like that, and it's feeding back into the rates. So it's quite a zero-sum game. And pretty much you also have those legacy issues, just like you have in Nigeria.
Yep, indeed.
So what will they do? It's up to that man on the screen what he will do. But whatever he does,
fiscal side has to step in.
Fiscal side has to step in.
Yeah.
But whatever he does, he also has to be careful, because you don't want to push out a lot of entrepreneurs from the system in Ghana at this point in time. And it looks as though you are pushing people out already. Yeah. Because Ghana wasn't known to have this very high interest rate before. And when Ghana had low interest rate, people could invest heavily in the real estate sector and things like that. So it's just a balancing act. Black Friday, we know the numbers here.
Tell us now. Tell us the numbers.
The reason Rotus, trust me, one cycle, it will be a struggle. But the numbers are out there. I think I was seeing Jumia's numbers, and they were saying revenue for Jumia, the biggest all over Africa, is not even up to 40-50 million US.
Well.
Yes. So the numbers are not great. That's why they can't release it. It's paltry compared to the bigger competitors all over the world. And that's why they are not proud of releasing it. The numbers are not great. And there are many issues in the real estate, in the e-commerce sector in this country. Fulfillment is a big problem. The fact that 2-week window you can return goods and services, it impacts on your downline because you're the one that pays for the logistics, go and fro, and they return it. And you know also the problem of what I see versus what I got.
Yeah.
There's also that problem. So the numbers are not great. That's why nobody will wholeheartedly come and show you the numbers, because they don't also want to dampen interest in the sector. That's the back-end story nobody will tell you.
Okay, Ghana is in dire straits, like many economies of the world, and that's why, the finance minister, Ken Ofori-Atta, has made it very clear that they're going to the IMF for bailout, for help. I just hope that when Ghana gets that, the Ghanaians will not behave like the people of Malawi, who put out advice to celebrate their president for succeeding in getting an IMF loan, forgetting that the loan that you take, you will pay for it, and it's debt, for present and future generations. I mean, inflation is so high in Ghana, so I imagine that maybe they will tighten, following the trend. Right, and in any case, we have already seen the indication of that in the statement made by the Vice President Bawumia, Vice President Bawumia of Ghana, who said that, look, now they can't pay in dollars for oil. They want to use gold to pay, because the cedi are so depreciated badly that they need to just find a way of, saving it. And then, of course, the president, in the 1.3 trillion budget that he presented last week before the Ghanaian parliament, introduced so many measures that indicated tightening. Even on the fiscal side, there will be no more tax waivers. No new departments of government will be created in 2023. In fact, for this 2022 Christmas, the government of Ghana has said nobody is going to print calendar. Nobody is going to give out any Christmas cards or ampas. No ampas. It is that bad. And they are also proposing salary cuts, so they need to cut fast. But the thing, of course, is that it is after a fashion that African governments say, oh, there is a problem internationally, oh, it's a war in Ukraine. How many of these governments are willing to take responsibility and say that we have mismanaged the economy? Because leadership is always the missing link. And that's why in Malawi, the entire cabinet does not seem to understand what it means to take an IMF loan. They think it's like winning a lottery. That's the kind of problem you have here in Africa. Now, secondly, as for this issue about cryptocurrencies, you'll recall that last week I asked that why is it that Nigerian payment systems, platforms, have all gone to Kenya and they are being embarrassed in Kenya. This is the source of the problem because the SEC of Nigeria never at any point really accepted cryptocurrency as digital assets. So these persons, these companies, including Korape, Flutterwave, Multigate, rush to Kenya, and they are affiliated to financial institutions in Kenya. And then the suspicion about whether they are involved in money laundering or not. And I was asking the question that, isn't there something, that the Nigerian government can do instead of exposing, young persons in that fintech space who are, doing a lot of innovation, who are providing a lot of opportunities to embarrassment in Kenya just because they are not accommodated at home. And yet, everybody campaigns about innovation, about youth energy, but they don't get enough encouragement. However, what Mr. Yuguda said is probably something we can hold on to, that you will need a combination of regulators to be able to allow this, and that he's not ruling it out completely, that maybe in the future, the federal government of Nigeria would reverse itself. Finally, the awards, that you and Bosin won on behalf of Arise TV, at the Pearls Awards ceremony. Congratulations once again. But of course, that the reward for awards, the reward for hard work is more hard work. It's more hard work. The second one is the implication. And when Bosin shows up, I'll tell him that the two of you cannot just be carrying awards like that. And you know, you will not give us the implications.
We don't do small chops.
I know you are up to the task.
Yes.
Even the people in the gallery are saying, we must enjoy the implications.
Check them out.
Anyway, congratulations.
Thanks, Doctor.
I'll just jump off from where Doctor has ended, which is we're really proud of the work that the business unit and of course Arise TV is doing. It's so good to see you pick up another award and looking forward to more. Let's come back. Let me speak on behalf of the millennials who got the invite to the Metaverse event here in Lagos. The first launching for the first time in Africa in Lagos. It's a very big event, especially targeting. You mentioned the people that came in, but beyond that, like you mentioned, Zuckerberg, despite being at the very forefront of pushing Metaverse, hasn't done really well in terms of stocks. And you wonder why, the question for me when I was watching, the big deal or the big event of coming to Nigeria is that despite the, full acceptance of Metaverse and it's, by business leaders, by investors, they're still looking to penetrate other markets, Nigeria being one, and being as inroad into other parts of Africa. I'm a bit skeptical, of course, with it. I don't know how well they'll do here in Nigeria if they haven't done well in other countries that they are, they've embraced other technologies. So, for instance, 5G, we hear all the conspiracy theories around that. There's still an issue around it, and yet, introducing this, introducing the metaverse and bringing it into Nigeria. Now, for me, being optimistic and future forward, I'm excited about it. I'm looking at the opportunities. I'm not sure if I'll bite. But I'm excited, and I'm looking forward to the opportunities, especially because we're becoming the tech capital of Africa. And so, if you would look at trajectory, especially in the tech world, it seems like a good business idea in terms of investment. Whether I would invest or not, is another story. But I believe that Meta and other companies who are pushing Metaverse have their work cut out for them, especially on the African continent.
Very true.
However, I do think Nigeria is an excellent place to start off, and I hope that government regulations will favor them, as Dr. Batia talked about, even with regards to fintechs and the challenges they're facing already in the nation. But congratulations, looking forward to the opportunities. I saw the young people loved it, and that's why it's great. With innovation, you talk to the young people. We have I say we have the opportunity to embrace new things, and looking forward to seeing how that sector would grow.
Good stuff.
So, in all fairness, quickly to SEC. SEC has got a very good regulatory sandbox, for financial services and things like that, which I think is quite very innovative. And I think as time goes on, they'll be able to study and crack, the intricacies around crypto, which might be problematic now. I mean, look at what happened to FTX and the likes. But in all fairness to SEC, I had explored SEC's regulatory framework, and I'm like, wow, it's so good. So good.
So it's encouraging.
Anyway,
encouraging.
Thank you, Rotus.
Thank you, Doctor. Thank you so much.
Say they are looking at.